Um, yeah, it's finally the weekend, May 2nd. So, quick rundown on the news. First, I want to start with Novo Nordisk. Um, People are discussing whether or not to um, buy it, to invest in it, and it's up slightly. I mean, not really slightly, but given the volatile circumstances, 2.6% doesn't look like that much. So the main news here continues to be the partnership between Hims and Hers, as well as Novo Nordisk, specifically Novo Nordisk um, giving Hims and Hers exclusive rights to sell their drugs. If we come to Hims and Hers stock, however, as you can see, 12%. I mean, this company has just been doing insanely well in the past week, up 43%, which does seem like a lot. However, it had peaked earlier this year at 68, let's say $69 per share compared to 40. Um, but still quite impressive. But yeah, so Novo Nordisk is having ripple effects across the medtech space. But one of the more interesting news is that the labor market is stronger than expected, um, and actually going quite strongly ahead with less unemployment than expected. Um, so the S&P 500 and the Dow, uh, as well as um, the Nasdaq, have all just been on a beautiful winning streak recently. I think they're almost there to get back to at least neutral territory um, since the beginning of the year. But the most exciting news I really want to talk about is Spotify. Now, why specifically Spotify? Well, they just won a legal case, as you can see, 7.6% up to just today. And I mean, they've been doing pretty well recently. Year to date, they're up 40%, 41%, which is an incredible accomplishment, especially given the backdrop of how volatile of a market it's been and how risk averse investors have been. But yeah, Spotify is doing fantastically. They recently won a case against Apple, specifically the App Store's monetization. So now Apple needs to allow all of its apps, um, external payment systems. So, for example, if you get a Spotify membership, you don't have to pay it through the App Store directly. You can now use a web browser to pay for it, which means that the App Store does not get its 30% cut, thereby increasing um, Spotify's and also, of course, other apps' margins. Specifically, one of my friends works in the mobile gaming industry, and he told me that this would be absolutely huge for them because they've been struggling with specifically monetizing on Apple. They had to either increase prices of their products where they were at that point undesirable, or they would have to pretty much operate without any profit. So he's very happy. Clearly, Spotify is very happy. Spotify investors are very happy. Honestly, I'm happy because I just don't like that Apple monopoly. And Apple, it's the only, it's the only Mag 7 stock that actually is losing out. As you can see, Microsoft up almost 2%, Nvidia a little above 2%, Amazon almost 3, Google 1%, Meta 4, Tesla 2.5. Although, again, when it comes to Tesla, I am quite biased, but I just don't understand the value proposition there. I have to be honest. I simply will not buy it. This is not advice for you, though. You do whatever you want. I'm just saying that I do not understand the pricing and the valuation of Tesla. So when it comes to Apple, you can see that they're down almost 1%. This corresponds to, by the way, when the news broke. So they went down 2%. Then the shares rallied a little bit to bring them back to almost positive territory, but especially in the after hours, they're still sliding a bit. Um, so yeah, it's been the main, I think, big tech loser so far. They're still up for the past year, but year to date they're down 16%. So I don't know where Apple will go from here on out. Uh, all I know is that they have hit a rough patch, and especially given the China tariffs, uh, it seems like Tim Cook is, pun intended, cooked. Um, yeah, I'm sorry I had to do that. But yeah, I think that Apple will try to evolve more and more into a personal banking business. I've been seeing a lot of news regarding the Apple Card, and if you don't know, it is a credit card, a financial product that Apple offers in collaboration with Goldman Sachs. And yeah, it's a straightforward cashback card that where the cashback gets deposited into Goldman Sachs's high yield savings account. And I think that at this point, Apple has pretty much hit a brick wall when it comes to hardware. And as we can see, they're also losing on the whole monopolization of the App Store front. So I do think that the one area that they can innovate in is continuously working on their payment systems. Not necessarily the wallets. I think that those are also under threat of SEC investigation, but specifically for user-facing financial products like savings accounts, maybe even their own investment in their own brokerage accounts. So I think that that is the one area where they could innovate, but yeah, I don't really see its future as too promising. Now, just to close off our discussion, I know it's Friday. Exciting news, I hope, for everyone. And if not, then, well, uh, yeah. Uh, what can I say? I hope you have better future weekends or holidays or vacations. But yeah, so far, I mean, when it comes to my portfolio, it's up slightly. The week has been pretty good, treating me pretty well. Again, uh, when it comes to April, we saw some downturns and now some upside. Um, One of my largest holdings remains to be Nvidia, but one of my favorite ETFs by far has to be SCHG, which okay, I don't know why I can't view the day, but it is up a lot more compared to QQQ even. So 1.86 compared to, let's see, 1.96. Okay, so I guess QQQ did beat it out. However, the expense ratio on QQQ is quite high compared to SCHD. So yeah, again, happy Friday. Thank you for sticking around. I hope you enjoyed this bit of news. I'm still finding my way. So, thank you for coming along on this journey. And yeah, I'll see you on Monday.